What are your financial goals? Have you ever really sat down and thought about it? Not just a vague, I want to be rich, but what you actually want to achieve with your money. Today, let's break it down, looking at both short-term and long-term goals, and we'll use a big one, buying a new house, as our main example. So let's start with short-term goals. These are things you want to achieve in the next 1 to 3 years. They're the stepping stones to your bigger financial future. Think of them as quick wins that keep you motivated. A great short-term goal could be building an emergency fund. This isn't the most exciting goal, but trust me, it's the most important. An emergency fund is your financial safety net. It covers unexpected expenses like a car repair or a medical bill, so you don't have to go into debt. A good target is to save 3 to 6 months' worth of essential living expenses. Start small if you need to. Even saving $50 a week adds up to $2,600 in a year. Automate it. Set up an automatic transfer from your checking to your savings account right after you get paid. You won't even miss it. Another fantastic short-term goal is paying off high-interest debt, especially credit card debt. That interest is like a leak in your financial boat. The faster you plug it, the faster you can sail towards your goals. Two popular methods are the avalanche and the snowball method. The avalanche method means you focus on paying off the debt with the highest interest rate first, which saves you the most money in the long run. The snowball method is about tackling the smallest debt first, regardless of the interest rate. You get a quick psychological win, which can build momentum and keep you going. Choose whichever method works best for your personality. Now, let's think bigger. Long-term goals. These are the major life milestones you're aiming for, things that will take 5, 10, or even more years to achieve. This is where buying a house comes in. A house is often the biggest purchase you'll ever make, so it requires serious planning. The very first step is figuring out how much house you can actually afford. A common rule of thumb is the 28/36 rule. This suggests that you should spend more than 28% of your gross monthly income on housing expenses, that's your mortgage, property taxes, and insurance. And your total debt, including housing, car loans, and credit cards, shouldn't exceed 36% of your gross income. Use an online mortgage calculator to play with the numbers. This will give you a realistic price range and prevent you from becoming house poor. Once you have a target price, it's time to focus on the down payment. This is a huge hurdle for many first-time buyers. Traditionally, a 20% down payment is recommended because it helps you avoid paying private mortgage insurance, or PMI, which protects the lender, not you. For a $400,000 house, that's an $80,000 down payment. That sounds like a lot, and it is. But don't be discouraged. There are many programs, especially for first-time buyers, that allow for much lower down payments, some as low as 3 or 5%. Research FHA loans, VA loans if you're a veteran, or other local and state assistance programs. Saving for that down payment is a marathon, not a sprint. This becomes a primary financial goal. You need a dedicated savings account, for it. A high-yield savings account is perfect for this. Call it Future Home Fund or something that inspires you. Then figure out how much you need to save each month to reach your goal within your desired time frame. If you want to save $40,000 in 5 years, that's about $667 a month. Break it down. Where can that money come from? Can you cut back on dining out, cancel subscriptions you don't use, or pick up a side hustle? Every little bit helps. While you're saving, you also need to work on your credit score. Your credit score is a huge factor in getting approved for a mortgage and determining your interest rate. A higher score can save you tens of thousands of dollars over the life of your loan. How do you improve it? Pay all your bills on time every single time. Keep your credit card balances low, ideally below 30% of your credit limit, and don't open a bunch of new credit accounts right before you apply for a mortgage. You can check your credit score for free from various services, so keep an eye on it and know where you stand. Let's not forget other long-term goals. Retirement is the big one. Even while you're saving for a house, you can't neglect your retirement savings. The power of compound interest means that the money you invest early on is the most powerful. If your employer offers a 401k with a match, contribute at least enough to get the full match. It's free money. After that, consider opening a Roth IRA. The great thing about long-term goals is that they can often be pursued at the same time. It's all about finding the right balance for your budget. So, how do you juggle all of this? The key is to have a plan. A written budget. It sounds boring, I know, but it's your roadmap to financial freedom. You need to know where your money is going to tell it where you want it to go. Use an app, a spreadsheet, or just a notebook. Track your income and all your expenses for a month. You'll be surprised at what you find. Once you see the full picture, you can start making conscious decisions. You can allocate specific amounts towards your emergency fund, your debt repayment, your down payment savings, and your retirement accounts. Let's tie it all together with our house buying example. Your short-term goals directly support your long-term dream. Building an emergency fund ensures that if your water heater breaks a month after you move in, you can handle it without stress. Paying off high-interest debt improves your debt-to-income ratio and frees up more cash flow to save for the down payment. Improving your credit score gets you a better mortgage rate. See how it all connects. Financial planning isn't about restriction. It's about empowerment. It's about taking control of your money so you can build the life you truly want. Whether your goal is to buy a house, travel the world, start a business, or retire early, it all starts with setting clear, actionable goals. Start small, stay consistent, and celebrate your progress along the way. You can do this. What's your number one financial goal right now? Let me know in the comments below. I'd love to hear what you're working towards. Thanks for watching, and if you found this helpful, be sure to hit that like button and subscribe for more content on building your best financial future. See you next time.